Now this is the part that people don't understand. It's like raw land. Well, I don't make any money on raw land, so why do I need to do a 1031 exchange? It doesn't qualify. Raw land doesn't make money sometimes, right? I had a client a little bit ago out of Texas. I'm doing an exchange for him. He's selling a multifamily there, and he wants to buy a multifamily in Phoenix. Or actually, he wants to buy a warehouse in Phoenix. So he sold one I'm doing the exchange on. I'm talking with the guy, and he's like, oh yeah, I just sold a property last year in Texas. It was a piece of land. I couldn't do a 1031 exchange on it, so I took the money and I bought a warehouse in Phoenix with the money. And I go, you're going to not like what I'm going to say next. Did you know you could have done a 1031 exchange on that raw land and to buy the property in Phoenix? He goes, what? He paid like $100,000 in capital gains tax on that sale. And guess who the first person he's going to call? His realtor's broker. So even though, again, it's not you, they like to blame you guys. So held for, see, this is how it reads in the tax code: investment property or property held for productive use in trade or business. That's why the raw land counts as investment. Other properties like single family, commercial, has to be productive. Yep.
So then with that in mind, can you then buy raw land with
Yeah,
the intent to...
Absolutely. Yep. You can. All right, so these are the ones that are not qualified primary residence. So the biggest thing that the IRS looks for is your taxpayer's intent. So we're talking about how long you have to hold the property. So whatever your intent is what kind of steers it. So if you sold a 1031 or did an investment property, do 1031 exchange, it has to be an investment property on the replacement side, but stuff happens. So as long as your intent wasn't to go move into it right away, and your actions are that you're going to do it as maybe an Airbnb, but then the HOA 2 months later says no more Airbnbs, well, your intentions were good. You were buying an investment property for that purpose. Now, if you went off and did a 1031 exchange, sold investment property, and moved into it right away, pretty easy for the IRS to prove that your intentions were not to keep it as an investment property. So that's kind of like, there's a lot of loosey-gooseys when it comes to the tax code, and a lot of those decisions are made by who? The tax advisor. Your tax advisor is the ultimate person that says, nay or yay, you can do that or not, based on what your intent and actions are.
So your intent on the raw land was to hold it, but yet your real intent was to build on it 3 years later.
And that's okay, because that's 3 years later. Just
So
buy and hold
what's
period.
the limit? 2 years?
2 years if you're going to convert it. 1 year if you just hold it. So we'll get into the converting side in a second, but yeah, as long as you at least hold it for one taxation period and claim it as an investment property, and then next year you moved into it, things happen. Your intent was that you were doing it as an investment property like the Airbnb, didn't work out. Now you can move into the property.
So what if it happens before that year?
Then it's going to be up to the discretion of the tax advisor. I'll tell you a little story here on this one, just because we're getting a lot of great questions. I had a client, 2 brothers out of California, sold, it was a $2 million property, but it was probably, I saw pictures of it, it was not that nice. It was in Oceanside, California, not a bad area. They sold this $2 million property. That was an Airbnb investment property for them. They sold it and they bought a property in Fountain Hills, Arizona. You know where Fountain Hills is? Nice homes there, kind of a little bit retiree age. They bought an existing Airbnb with the money. This is like a year or so ago. And they bought it basically walking through it one time. But the numbers were good, so they said, okay, we'll buy it. And so they bought it in exchange. They go into it a month later, and they want to review the property again. Somebody was in the property. This was around January, the height of the season of Airbnbs. And so there was a tenant in it that was Airbnb. And she was a regular. She's been renting it every single year that's been an Airbnb for those 2 or 3 months. They go through, and she goes, I didn't know this property was even for sale. I said, yeah, we bought it. How much you bought it for? Oh, we bought it for 1.5. I wish I knew it was for sale. I would have bought it. And they go, well, you know. They just look at the property. Yeah. And she goes, they're looking at the property, doing whatever. She comes back to them like half an hour later, as they're still reviewing the property, says, would you be interested in an offer? And they're like, well, maybe. $2 million she offers them. I will buy from you and close within a month for $2 million. They just bought it for 1.5. And guess what they said? Let me get back here. But who did they call? They called the tax guy. They called me. Everybody's having this conversation back and forth. Our attorney's looking at it just like this. Their intent was 100% to buy and hold it for a year and something uncontrollable happened. They got what they call an unsolicited offer, which means that they didn't put it on the MLS. Their intent was to hold it, buy it, hold it as investment property. Somebody came to them and said, hey, here's $500,000 over and above what you bought it for. How would you not say no yesterday? So they did the exchange, and everybody was okay with it and didn't get challenged. Get much, and then get that under my belt that I can claim a couple tax years of it as a rental, then I could do a 1031 exchange. So if you have a client that's not using their property very much, because here's the minimum, 14 days in 2 12-month periods that you have to rent the property. But you can only use it 14 days yourself personally, or 10% of the time that you rent it. So you're going to be limited on how much you can use it, so it's more. You may not want to have it as an Airbnb always, but the year before you're going to sell it, or the year before you're going to, or 2 years before you're going to sell it, start implementing something like this to avoid paying a capital gains tax. Now, what they don't count here is maintenance. I go to my property on the weekend, and I have to clean all the pine needles up, and my friends are out drinking by the fire pit. I put on my little ledger, I'm up here doing maintenance this weekend. And it's 100% okay, and it doesn't count against your 10% time you're using. But do you need to keep records?
Oh, yeah.
Yes, because if they do what? Begins with an A? Audit. Audit! You're in trouble, right? And the first thing, have you ever been audited before? The first thing is they want to see proof that your cleaning is true. So if you lost all your gas receipts and all your entertainment receipts, they don't care. They want you to call that credit card company and get them. If you don't have them, you're going to have to pay tax on them. Or they're going to amend your tax return. That's the burden is on you when it comes to an audit. And hopefully you never get it. All right. So another exit strategy is the dream home. We're going to do this one. You'll want to have your second break, and then we're going to wrap up. So this is called, and actually rules on from the IRS. This is a way to convert your investment properties into primary residence. So here we go. 4 rental properties. They do a 1031 exchange into their dream home. Minimum, they have to rent it for that 14 days a year. And then on the 3rd year, because where were they living for those 2 years? They were living in their primary residence. But before you move into the new property, or as you're moving into new property, you put your primary residence on the market and you sell it under the 121 tax code, which is you get that $250,000, $500,000 tax free. You sell it, use that money to fix up the dream home, kick out those tenants, update it, pay off any mortgages. You move into it on year 3. After 2 out of 5, that new property becomes your primary residence.
So you skip the tax.
Well, sort of. You're falling into a different tax code because now the primary residence code is going to exist after 2 out of 5. There's a little bit of prorating stuff that goes on there too, depending on how long you had the rentals versus how long you own the primary. But all said and done, the longer you hold it as your primary residence, the less you have to pay in capital gains tax.
But all that moving up
Yeah.
and away.
Sort of, yeah. You're buying the same or
2 years, right?
Yeah. It's a way to convert your investments without dying, and you're now able to offset some of that capital gains tax and reset it into a different category on the tax code, which is that primary residence, the 121 guy. Nobody knows them because we do. Any questions on There's their answer. Yeah. So what does that mean? Our industry is not regulated. Yours is. Every title is. Everybody that handles money has to have a license and regulated, other than us. And we hold like $400 or $500 million of exchangers' money every month, and we're not regulated.
How do we know you're not going bankrupt?
How do you know?
I knew you.
Can I borrow this from you?
Of course.
See the little thing I handed out to you? On the back, all these nice little guarantees. We're a part of a Fortune 300 company, so we can over-insure each exchange. 100 million fidelity bond, 50 million written performance, 30 million E&O insurance on each exchange. And have we ever had to use it? Not since 1980, but it's there just in case. You know that bank that crashed last year, Silicon Valley? You know how many exchangers had money in that bank? luckily, the government bailed them out because they would have had a bunch of exchangers that would have had to pay tax on money they didn't have. So whenever I said that, it's very important to work with a company like us and Lawyers Title because we have a big company that's behind us. Fortune 300 company, these insurances are expensive to maintain. So we're able to offer that with every exchange. Not every smaller company will do that. Yep.
Are you affiliated or work with fiduciaries?
No, we don't have to. We're not required to. But again, our parent company is. So through that, we are. Yeah. So who can handle your exchange? Well, exchanger is disqualified, obvious, right? Anybody related to the exchanger, an agent. So this is like, well, how come I can't get title to do my exchange? Because if you have a 2-year working relationship with any of these people, they cannot be your exchange coordinator or exchange QI. So anybody you don't trust, other than giving the guarantees on paper, cannot do your exchange. Anybody you have a relationship with. But everyone else qualifies, even this gentleman right here. Remember Bernie? They love with her money. So that leads me to a couple little scary stories here. This one is one out of Nevada. It's a decent exchange company out of South Nevada. And we make $1,000 per exchange, right? That's not a lot. So we got to do a lot of volume to make the money. Some smaller companies, they may do 20, 30. It's a little harder for them to survive. So sometimes they try to do stuff like this. They took $98 million of exchangers' money to invest into a medical device company to go public. To this day, it has not gone public. So $98 million they lost. And so the exchangers had failed exchanges on money that they didn't receive. They sued them and only got 90% of that money back. So you might get an exchange for maybe $700, maybe $800 or $900. For a few $100s more, you pay $1,000 with us, your funds are going to be there and guaranteed. The other one is that there's some smaller, and there's a guy out of Florida, really respectable in our industry, an attorney that did 1031 exchanges. And he was a one-man show. He had an office, but it's one of those executive offices where you share the receptionist and all that stuff. He was driving along the highway in South Florida and got in a major car wreck. Ended up going in a coma. He had about 20 different exchanges ongoing, and he went into a coma. Every one of those exchanges, their timeline came up. It's like, oh, I found a property. Can I have the money? Can I have the money? Can I have the money? He was in a coma. Nobody could reach him, of course, right? He called the office. The executive office was not even really his receptionist, so she just stopped answering the calls. And all those exchanges failed. He wakes up 6 to 8 months later to multiple lawsuits. Not his fault. But they went with him. He's a very knowledgeable guy. They went with him because of that, but he didn't have a team. I have a team. So if something happens to me or something happens to Adrian or something happens to one of my coordinators, you're going to be covered. You're going to have your exchange just keep going. But in that situation, one person, one show, and he didn't even have an assistant that he trained. If he did that at least, he would have been able to save his exchange. So just keep that in mind. Ever watch that TV show, American Greed? It's still on, but you have to watch it on YouTube. There's a guy named Edward Oakham. He went off and bought a couple exchange companies on the East Coast. He's like, this is the best business ever. All I have to do is hold people's money, and then they find a new property, I give it to them then. So his business plan, I don't know what it was, but people would do an exchange, they give him $1 million, they'd go find the replacement property 6 months later or 2 months later, and then he would use the money to go party. He would go to Vegas. If you watch the episode, he went to Vegas, he bought a yacht, he bought a couple of supercars, just blew the money. No end game. But that was okay because Peter kept paying Paul, right? But then the market collapsed in 2009. In 2009, there's probably countrywide, there's probably only 10 exchanges for the whole year. So he wasn't getting any more money. Paul was broke. Paul was not paying Peter anymore. So he got caught, and he's doing 100 years behind bars. That scared you a little bit? All right. So here's what you want to look for in a 1031 exchange, and this is just what I told you on the back of that brochure. Make sure they have good performance guarantees, make sure they have good bonds. But this is the rule. Remember I told you the 3-property rule? That's the most common one in residential. That if you're no fair market value, you just have to have 3 properties that you identify within that 45 days. This one confuses the heck out of people. It's the 200% rule. It doesn't mean you're limited to this. This just means how much you can identify. It's 2 times the gross sales price. So if you're going to buy multiple properties, the 200% rule might be the better one to go with. So if you had a $5 million property, now you can identify as many as you want, up to $10 million. So first one, you're limited to units. Second one, you're limited to a dollar amount. Who helps you decide this? A good QI will help you decide which is the best way to go. Because there is one exception too. I had a client that wanted to buy 5 properties and they were way over 2 times his gross sales price. So what did he do? He bought all 5 with the one exception. So as long as you're going to buy everything you identify, it's still okay too. So we can help your clients in that situation, which is the best way to identify. So don't get too caught up in that side. Any questions on that?
No.
All right. So this is just some of the marketing stuff. I'm going too fast. I want to cover this and then we'll get to the end. Don't look at that. That's my stuff. Okay. There we go. So this is the process for 1031 exchange. All right. Number 1 is that you find a client to buy your investment property, of course, get it under contract, put it into escrow at lawyer's title, and then call your QI to set up the exchange. Okay? Don't wait till the 11th hour. During crazy times, like a couple years ago, we were charging extra if they called us at the last minute. We can still put an exchange together even at the signing table. So if you didn't do it, you're at the signing table, we can snap one together. But the only problem there is, I did this older couple a few years ago. They were at the signing table. They're like, so the escrow officer said, oh, you could do a 1031 exchange and not have to pay the capital gains tax. And they're like, not pay the capital gains tax? Great. Sign me up. Oh, and then I got on the phone, conference call. I'm thinking they had an idea what was going on. I said, you got to do 1031 exchange. You have to buy a new property of like kind. It's $1,050. We can set up just this and this, and you don't have to pay the capital gains tax much to buy a new property. All they heard from me was they didn't have to pay the capital gains tax. So they called me the next morning and said, when can I get my money? And I go, you're in an exchange. I can't give you your money. It has to go towards the new property. Oh, no, we don't want to buy any new properties. We're done. And then I had to say, well, we have to by law hold the money for 45 days, and then I can release it to you. You think they were happy? No. But that's the point. Don't wait to the 11th hour, because the education that I'm giving is fast forward, and they didn't hear everything, so then they went into something that they didn't really want to do. So at least give me 10 days before so we can set it up. But we can set it up if you have to at the last minute. Think of one thing, we talked about a lot of gray areas here today, but what did they get Al Capone for? Activation. Thank you.
Wasn't that information awesome? I'm telling you, Rick he cannily says he only tells bad jokes and doesn't tell good stories. His stories, I think, were so good at exemplifying what and why a 1031 exchange is important and how it benefits us as real estate people who own real estate. Stay tuned for the extended version. The whole, I don't know how long it's going to be. We may break it up into 2 parts, like 2 half-hour segments. But I do want you to stay tuned. If you like this, subscribe below, like it, please, ask questions, and that way you'll be notified when his interview comes up on my YouTube channel. Thank you, and thank you for watching.